Thank you, Mr. Chairman. Dr. Goodfriend, during a hearing last May, you called the Federal Reserve's dual mandate, quote, incoherent, and you suggested eliminating the full employment mandate. You said that, quote, whether or not unemployment is 1% or 20% over a sustained period of time is largely due to factors outside of monetary policy control. However, in a speech last June, Governor Powell said, quote, the problems that some commentators predicted have not come to pass. Accommodative policy did not generate high inflation or expensive credit growth. Rather, it helped restore full employment and return inflation closer to the 2% goal. So do you disagree with Governor Powell's assessment?
No, I don't.
And so then your analysis was incorrect then?
No, I'd like to say that I regret the word incoherent. What I was talking about was, in the long run, it's inconsistent for the Federal Reserve to control both employment and inflation. The Federal Reserve has agreed, most central bank economists agree, that over the long run, central banks can control only inflation. But that is not a statement against the dual mandate. Again, what I believe is true is it's critically important to anchor long-run inflation in order to get the capacity for monetary stimulus to drive the unemployment rate down to the natural rate or to the vicinity of full employment.
Let me follow up on Senator Brown's questions about your Bloomberg quote when you said it's really doubtful whether or not the Fed can achieve 7% unemployment. Even if the Fed did succeed, it would give rise to a rising inflation rate in the next few years, which would be disastrous for the economy. However, today, that's your quote. I'm taking it straight from Bloomberg.
Right.
However, today unemployment is 4.1%. Inflation is still running below 2%, despite the fact that the Fed waited more than 3 years after that interview to increase rates. So knowing what we know today, do you honestly still think the Fed should have followed your advice in 2012 and raised rates before inflation neared its target?
No, I don't. But those statements are out of context. What I was warning about was, in the past, the Fed has had trouble getting unemployment down, and the reason was we had zero interest, and we had lost the stimulative power, the ordinarily stimulative power of monetary policy. My point was in the context of that conversation, and
can you point out any, with all due respect, and I'm sure academically there's no question that you're a very bright person, but how am I not to hear everything you said in the past and then what you're saying today as a confirmation conversion about the dual mandate obligation?
Again, it's not my, what I am saying is that the history and thinking about monetary policy has said, if we want to get unemployment down to the natural rate, to the vicinity of full employment, we as central banks need to stabilize long-run inflation expectations.
Can you give me
That's all I'm saying.
Can you give me anything, quote, show me, direct me to anything that you have said in the past that suggests that you support and affirm the dual mandate of the Federal Reserve?
I can show you some publications in which the point of my work was to say, our goal is to get unemployment down to the natural rate, and therefore I'm supportive of a long-run inflation target. I've worked on that for decades. It's proven to be the case that that has worked in the last decade, and I'll stand by that. Whether or not I've talked about the dual mandate, I totally support it. And in fact, the reason for stabilizing inflation over the long run is exactly to make the economy operate at full employment.
Right, let me turn to Ms. McWilliams. The administration is actively searching for ways to diminish banks' responsibilities to serve those very communities through undermining the Community Reinvestment Act, something that many of us strongly support. Shouldn't the administration be focused on strengthening, not weakening, a tool that ensures banks are held accountable for serving low and moderate income communities? And what assurances can you give us that the FDIC under your leadership will guarantee banks are meeting the home mortgage, small business, and other credit needs of low and moderate income communities?
Senator, thank you for that question. The Community Reinvestment Act is the law of the land, and it is a duty of the Federal Deposit Insurance Corporation to follow the law of the land. The unbanked and underbanked communities are a vital part of our economy, and I can tell you for a fact that a number of banks are seeking opportunities to bank those communities, not only for the purposes of the CRA, but also because they need to expand their customer base, and that's the organic way to grow the company. I can also assure you on a personal level, as somebody who was a part of the low and moderate income community, that the mission of the CRA resonates profoundly with me on a personal level as well. And I can give you my commitment that I will ensure that the FDIC fully executes the mandate of the CRA.
Thank you for that. Thank you, Mr. Chairman.